Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. And before jumping to the charts, don't forget to smash the like button, share with your friends, and subscribe as well. Remember, we are exchanging here my knowledge for your time, and both are precious. And let's jump into the charts. So before taking a look on today, let's take a quick look on 2000 and 2008. Uh, let's go take a look on two things here. The first one is going to be visible on the weekly. Yes, just a second. So the first thing we are going to look at is the size of the retrace before the crash. Okay, so we made it to the golden mini again, just like SPX and Dow Jones. And the key thing, we still traded below 41.81, and this was the major milestone, sorry, for the NDX. As you guys can see, just a second. Yes. So when I talk about later bullish continuation targets and triggers, this is what I mean. Okay, so actually this took let's see, 14 years to the next high, but was set since we breached 41.81 here. Okay, so we already measured the size of the dead cat bounce or the loser's rally. Now let's take a look on the size of the down move. Just a moment. So it was very aggressive, way below the down theory, 83%. Let's take a look where down theory would place us. Okay, so this would be the range for down theory. But the thing is, we had a parabolic. So as you guys can see, this is one of the reasons I don't trade. I don't use the support and resistance trade style. Okay, in my humble opinion, it's not worth. As you guys can see, we saw a lot of buying activity here following the previous bottom, just like here. Okay, and like I said, I don't like flat bottoms. Okay, and yeah, so the early stages, depending on the size of the move, they are not going to hold. Okay, so this is nothing new, nothing to worry about. And now let's take a look on 2008. I'll be quick here, just a moment. Okay, so again, exactly the same kind of move. A retrace back to the golden mini, but still traded below the 50% from this range, which was 2039. Actually, a little above 2049. Okay, that's what is the 50% average for this range here. And now let's take a closer look for the size of this move. So this one was more aligned with down theory. Let's take a look where it would be. Just one more second. Yeah, so right after we arrived at 50%. We can see we already back in the day, yes. So we can see all this the bulls showing up. Can you guys see? That's people who are aware the range to expect for a bounce. And also it was crystal clear as well that we have this double bottom in W shape. Not 100% symmetrical, but yeah, I think it's almost crystal clear. Yes. So very bullish back in the day. And I remember a lot of people calling for new lows, you know, this is not over yet. And then the market skyrocket and people stay behind. So now let's take a closer look at what we have here. First thing, let's measure the size of the down move we had back in the February. Just a moment, please. So 30%, in my humble opinion, not even close to be a health correction. And this move so far, just another moment, please. So I'm going to measure what we have right now, okay? Not going to measure any other scenario. A moment. So that line, just a second. Almost there. Yes. So far, this move right here, it's a 121% the aggression compared with the previous high, which you know, it's if it wasn't for the Fed, I would say this is all the way bullish, okay? But we know why it's going up and how it's going up, so it's not organic. And in my humble opinion, it's bearish, okay? And if we move forward, second, okay? So if we move forward, presuming, okay, I'm not saying we are going to reach, which I don't believe we are going to make, but it is possible, okay? Very possible. A move to 10,946 is going to be the trigger. Actually, it's 127. Yes. If I'm not wrong, it's 127. Yeah, so the thing is, if we are able to make a straight run to 10,946, which after the breach of the previous high, it's likely, okay? So somewhat possible, but it's not something that I am expecting to happen, because in my humble opinion, we are overdue for a correction, a health correction that we needed. Otherwise, everybody can quit the job, buy stocks, and get rich. Okay, so we know that's not how it works. And we know the market is going to punish the late bulls. And so there's another thing here. Let's take a look for a possible scenario for the down theory here from where we are right now. Just a moment. So, in my humble opinion, this scenario would be, you know, very, very healthy, in my opinion. We still are in a very aggressive uptrend move, but we don't have a parabolic yet, okay, which I believe is going to take place around 2024, 2025. Okay, let's address our 50% here. 51, 54. Yes. Description 50% down. Yes. So just a moment. Okay, so if we end up with a 50% retrace, repair that, take a look that we are going to breach the previous low. Okay, both. And this, in my opinion, it's all the way bullish. Okay, and also another reason we are going to stay way above 41.81, which was our old milestone for later bullish continuation. And if this scenario plays out, I believe we are going to have a very strong bullish reaction. Okay, very, very strong. And we are even able to see where is going to be the next resistance for the whole market. Just one more second. Yes. So, as you guys can see, the down theory, like Down said, everything is accounted in the charts. Yes, I can't agree more. And this range right here, as you guys can see, this was I just made this draw, okay, without any line here. And this range, the first one, let's make some notes here. Average range. And right below we have down theory, okay. And again, if we end up with a move like this, right in between both 5321 and 5154, it's going to be a epic bear trap, okay, because the doomsday fox will be closed, locked on this range. Why did I delete it? Okay, stay here. Yep, sorry. So the bears are going to be locked here and all the way up to this level. Okay, they will keep pushing, but the thing is, all this territory, it's the bulls territory. And so the first bear trap is going to be here, and the second one is going to be, second is going to be in this whole range. And so the bulls will keep pushing, the bears will keep getting liquidated, and we feel even more the fire. Okay, so this is my 50 cents, presuming down theory is going to take place. It is also true that we can end up with a more aggressive move. It is true, I'm not saying it is going to happen, but it is possible. Let's see here, almost 60. And below, I don't have the line below. Okay, so even if I don't believe we are going to make below, but let's say we end up with a right here. Let's address this line, the level, sorry. Just a moment. 6, 7, 15. What? Oh, sorry. I addressed the wrong level. Okay, so something like this range here, okay? The thing here is, I'm just using a lower low compared with these two guys here, okay? That's the point for this line, aligned with a even more aggressive down move compared with down, okay? And so this scenario here, just for the sake of this example, is going to be almost the same compared with this one here. Let's say we end up with a bear break, more aggressive move, and this is also the bull's territory, okay, because it's previous milestones that we already breached in the past, and in my humble opinion, very unlikely scenario to play, but just play my 50 cents here. It's better to be aware and have a plan than stay in the dark and don't have a plan at all. Okay, so guys, I believe this is it for now. Okay, I will keep watching, and for now, my range, the ones I am watching, it is to right here. Okay, 5-3-21, 5-1-54. Okay, I hope you guys enjoyed this video. It was a quick update. There is not a lot of things to cover on the macro time frames, but yeah, I will keep updating. And oh, there is another thing here. So why this line is here, 17,711? It's probably going to be, we don't have a trigger yet. We didn't make it to 10,946, but if we do, or even later, okay, doesn't have to play right now, but so even later, it's going to be the next target for Nasdaq. Okay, don't take my word for it. You can check on your charts, you can do your research. This method is 100% accurate. Okay, so this is one of the reasons that I'm paying very close attention to where is going to be the land zone, because the profits here for the next run is going to be life-changing. Okay, so folks, again, thanks for your time, thanks for your patience, thanks for your support. Don't forget to smash the like button, and I'm going to see you guys soon. Thanks again. Have a great day. See ya.